Hey guys, Eric here, Mr. Fired Up Wealth, and I want to bring you a quick video today on Lululemon, giving an update. Really exciting development. They're actually buying a company called Mirror Workout. Now, if you're not familiar with Mirror Workout, stay tuned because I'm going to break it down for you. I'm going to show you the website, show you what they do, but it's really cool stuff. In fact, I have friends that own Peloton and Mirror that say Mirror is better than Peloton, so you're going to want to see this. Now, if you follow the company, the CEO talks about what he calls the rule of three. And the rule of three is basically how they want to drive growth for Lululemon. They want to do that, number one, by having the best products, innovative products. Number two, having unique customer experience. And number three, through expansion, both internationally and domestically. So you're going to want to see this one. Stay tuned. Okay guys, so in case you don't know what Mirror is, I'm going to go ahead and just give you a quick run through of the company so you can see on your screen the nearly invisible home gym. And it's pretty cool. You basically hang it right on the wall and you can see, you work out, there's different instructors, things like that. It's personalized for you, so there's expert instruction. I'm going to zoom in so you can see that. Certified trainers from the country's top fitness studios provide motivation and live feedback. Experience risk-free for 30 days. Push yourself further, measure your heart rate, track your results, compete with yourself. As low as $42 a month for 36 months and 0% APR financing, no money down, simple, easy setup, schedule delivery, add your family, connect your devices, and so on. Okay, so obviously it's very similar to Peloton, but not everybody wants to have a bike. You want a different type of workout, like boxing, yoga, things like that. This gives you some great variety. And when you think about the type of person that likes to work out from home, I'm one of those people. I've got a home garage and I've got a full gym in there. I've got different types of cardio equipment, so I've got a rower, I've got a treadmill, etc. I don't have a Peloton and I don't have a Mirror, but they'd be welcome additions. And I think if I had one, I'd be interested in buying the other. Now, it might get expensive when you think about the different subscriptions and things like that, but I'm going to get to that in a second and show you why Lululemon's doing a good job with this. So first, how much did they pay for it? $500 million. Let's just get right into that part of it first. And I'm going to show you some stats and opportunity. So when you think of Peloton, right? Peloton is trading at $58. And according to this is just a quick Google search on Peloton stock. Their market cap is $16.53 billion. Okay, that's quite a bit of money, right? $16.5 billion. Now, as I already mentioned, Lulu is paying $500 million for this company called Mirror. So let's think about that for a second, though. So you're talking about $16.5 billion market cap for Peloton. And we look at Mirror for $500 million. Now, this company was created in 2016. It didn't launch until 2018. Right now, it's only available in the United States, and we'll get some more on that in a second. Now, they had $100 million in revenue, or they will, in 2020. And the CEO was on CNBC saying that this company, Mirror, will be profitable by next year, 2021. Now, if you ask me, $500 million might sound like a lot of money, but when you see the benefit it's going to unlock for Lululemon, this might be a pretty good investment. Okay, great, Eric. So why do we care? Why is this important? Well, number one, because you know that the work from home economy is here to stay. It really is. And you think about working from home, there's going to be more and more people doing that. Peloton has been blowing up. There's really not a whole lot of competition. So you've got that, you got more guests that are going to want to work out from home. The other thing that's really interesting is that Lululemon's been testing a membership program for over a year now, and they've had really good results with that, and people have been very receptive to it, which might sound surprising, but there is this whole kind of, cult following with the brand. And so when you think about the power of three, again, they want innovative products, they want a unique experience, and they want market expansion. Okay, market expansion. Mirror currently, we told you $100 million this year, they're expected in revenues, and they're going to be profitable next year. Mirror, as of right now, is only available in the United States. They're trying to expand that internationally. And part of Lulu's plan is to expand their international presence by double and then quadruple. This is going to allow them to do that in a very effective manner. And it's going to allow the power of recurring revenue. You see in a lot of my videos, we talk about SaaS, software as a service. That's all about the subscription recurring revenue model. This is allowing that same recurring revenue model where someone's going to pay not just a Mirror fee, they're going to pay a Lulu membership. So they'll have different plans is what I'm envisioning. And they'll have like a premium plan that's going to give you that Mirror membership unlocked in that as part of your membership package. Not only does this allow Lulu to build out the membership program, It also gives awareness for Mirror because a lot of people might not know what the company is. Okay, so what? Should you buy the stock or not? Well, let's look at it. So it's $309 today. You can see, let's look at the 1 year chart. You know, you can see that back in March 13th, it was $176. It's made a massive run back up. You know, it's expensive. It's saying here the PE ratio is about a 70. Don't always trust these from Google, but I would imagine that's probably pretty accurate. So it's not a cheap stock. When you think about retail apparel, you know, the market cap on these guys is $40 billion. And I want to say Nike's market cap, let's just look really quick, is 100 million, or I'm sorry, 100 billion. So their market cap is 120 billion. So Nike's market cap is 120 billion. Lululemon's market cap, we've got about 40 billion. So Nike is literally 3 times the size. And I don't really love how a lot of analysts compare Nike and Lululemon because to me they're very different. But I guess what they're going for there is it's athletic apparel, and Nike has that. Even though, you know, Nike to me is more about the shoes and that side of brand. Lululemon has expanded products. You know, when I think of Lululemon, I think of, you know, these pants. They've got men's and women pants. Real quick, guys, I don't want to spend a lot of time on this at all, but this is Lululemon's website. You can see, you know, a lot of people don't know how diversified they really are. And the women, they have everything from skirts and socks and swimsuits, tank tops, hats. I mean, just all kinds of stuff. Men, same kind of deal, tank tops, joggers, hoodies, pants, polo shirts, you know, t-shirts. They've got girls, they've got accessories. So they've got things like bags, water bottles, yoga mats, accessories. And then they've got the community, they've got home workout. So you can see they've already got this home workout section, community carries on. And so they've got this whole membership program that I talked about earlier. They've got classes and things they're already doing. So this mirror piece really fits well into what they're already trying to accomplish. 460 stores internationally as well as online. One thing important to mention, they were founded in Vancouver, Canada. Another important thing to mention though is that they're one of the few kind of retailers that were profitable during the pandemic. Now, you can see on your screen here, their sales were down like everybody else's. But according to the CEO, they were actually profitable during the pandemic. They've got momentum, they've got growth, they've got liquidity. And I really do think that when you think of, they want to have a unified ecosystem, what they're calling it. So Lululemon is going to, in theory, sell more clothing because people that are into Mirror are going to maybe be more attracted to Lululemon and then vice versa. So they're working for that type of economy, but I do like the stock. I think it's expensive here. I'm going to keep an eye on it because, like I said, I sold it at $250 back in February, and it's, you know, continued to go up. Obviously, I felt smart on March 13 when it was $179. Now I don't feel smart that it's back to $310. But I do like this as a growth play in retail. There's not a whole lot of attractive names in that space. So if you're looking for like a growth type stock in the retail space, you're not going to get much better than Lululemon. One of the reasons that I have confidence in it is if you follow the Nigerian brothers on CNBC, you know, not that everything they say is always right, but I think that they usually make very good points. Both of them played in the NFL, and the fact that they both invest in Lululemon and they believe in the brand, that gives me more confidence, to be honest with you, with Lululemon. And I think it's something that you should definitely take a look at for your portfolio. Okay, guys, so my final thoughts on Lululemon. For me, it's a buy under $300. Now, under $300 and a long-term hold. Now keep in mind that it could have some volatility. If we have any kind of market dip, you saw it happen in March, it got slaughtered, that would probably happen again. So be careful with it because it is expensive. People are paying a premium for that growth, but I do like it as a long-term hold if I can get it under $300. So I'm gonna keep an eye on that and just see what happens. One comment I wanted to make about this, when you think about Nike, now a lot of people thought Nike was gonna buy Mirror. And I actually think that would have been a good play for Nike. I really do. I think that Nike could have made this even more profitable than Lululemon's probably going to. You think about the scale and just the size that Nike already has. I kind of have to question, you know, is Nike missing out on an opportunity here? I mean, I don't want Nike to become, you know, not an innovator. Are they making the right call here and try, you know, they're just trying to be so focused on their niche? Or are they making a mistake by not trying to diversify outside of what they're already doing and capitalize on that recurring revenue? You could probably argue that both ways, but it is something, it's food for thought. I am a Nike holder, and this whole acquisition with Mirror to Lulu does have me thinking quite a bit. So I still like Nike long, I like Lulu long, but I just wonder if Nike doesn't need to do more. That's something you need to think about as an investor. Thanks for watching. Thanks for subscribing. Thanks for hitting the like button. Thanks for commenting. If you haven't checked out our Facebook group, please do that as well. Thanks for watching. Have a great rest of your day. Take care.